The broadcast is now starting. All attendees are in listen-only.
Hello, welcome to our webinar today. My name is Sasha. I'm a marketing manager here at Witham. And today with me I have Renee, who will cover the benefits of an ERP solution for wholesale distributors. We'll leave some time for questions at the end, so please submit your questions in the questions pane of the GoToWebinar control panel. And we will address them all at the end, and if not, then by email afterwards. We are recording the webinar, so it'll be available on demand afterwards. And with that, Renee, if you are ready to take it away.
Thank you very much, Sasha. My name is René Teberge. I have been a cloud advocate way before the cloud was even called cloud. I started in the days of application service provider, ASP, and then following that, it was called on-demand. I started my IT career as a software analyst and a developer. I was creating cloud intranet back in the early 2000s, and I was even a part of the Gmail beta test. That's how far back I started. My areas of expertise are in the selection of business application like ERP, enterprise resource planning, CRM, customer relationship management, HCM, human capital management software, process mapping, requirements gathering, and vendor evaluation. But really, my role is one to assist organizations select the right software for them. The agenda we have today is rather simple. We're going to talk about who your biggest enemy is and why is that your biggest enemy. Along with that, we're going to take a look at the biggest problems that wholesale distribution organizations face and how the biggest enemy has an impact on that. And finally, we're going to introduce you to your brand new BFF, your new best friend. So let's jump right in. Why do I say that spreadsheets are your worst enemy? There's a few examples I would like to share with you. The first one here is with a Fidelity investment fund. Fidelity, by the way, is an $18.2 billion a year company with 245,000 employees. So it's rather large. I just want to highlight the middle paragraph there where it says that during the estimating process, a tax accountant is required to transcribe the net realized gain from the fund's financial record to a separate spreadsheet where additional calculations are performed. This, by the way, is a standard operation. A lot of people do cut and paste like that. What's interesting is that a minus sign was not copied over into that separate spreadsheet, and so there was they were off really by 2.6 billion because the capital loss of 1.3 billion was treated as a gain, and so that was a significant mistake, a big snafu, like they say. Whenever the manual information was transcribed from one file into another, this can generate huge mistakes. Let's take a look at the next organization. This one is called TransAlta. It's a Canadian energy company, 2.8 billion, 2,400 employees. The third paragraph says that, quote, this looks like a career-limiting move by the person who made the cock-up and the people who failed to spot it. Snyder, that's the CEO, Snyder said the company would deal with the individual in the appropriate fashion. There's anything found at the end of the day that is, it's a clerical error. Calling it a simple clerical error. So the simple clerical error cost them $24 million. That's a boatload of money. Let's take a look at the next one. Fannie Mae, they need no introduction, and they also hit the news. According to their VP, and the quote says that an honest mistake was made in the spreadsheet using in the implementation of a new accounting standard. The article does not state whether it was a gain or a loss in the shareholder equity, but 1.1 billion, that is not chump change. So whether we're looking at a honest or a malicious mistake, we have another example of a fairly large organization making a significant error. Essentially what we're demonstrating here is that spreadsheets can lead to significant mistakes. Take a look at the last one now. This last one is Mark and Spencer. It's a multinational retailer. It's headquartered in the UK. $15 billion a year, 784,000 employees. You think with the amount of employees that they have that these kinds of mistakes would not show up, but they do. So in this case, there was a mistake that doubled the sales of the organization. Instead of showing a loss of 0.4% in sale, the group reported an increase of 1.9%. This mistake was actually discovered through an analyst's questioning during the earnings call. It's a little bit of an embarrassing spot for this to happen. The chief financial officer said that the mistake is not good. I guess she said it was down to the double counting in a spreadsheet. I would say not good at all. Here we have a miscalculation in a formula in the spreadsheet where sales were doubled. The stocks of M&S actually tumbled quite a bit that year. Have these companies recovered? Yeah, they're still in business today, but whatever has been lost is lost. It does not really get recovered. It's equity that has just vanished away. So what we've shown is errors in copying, error in omitting something. Some of those were malicious errors, some wrong formulas. If you were to do a simple search on Google for spreadsheet errors, it's going to yield hundreds and hundreds and hundreds of pages, all with similar stories. So why do we say that essentially the spreadsheet are very easy to use. They have their advantages. They're easy to use. You can self-teach quite easily. I wouldn't consider myself an expert in spreadsheets, but certainly an advanced. Never took any formal training for it. I've just happened to have picked up some knowledge along the way, and so you can self-teach very easily. It runs on anything. I use it on my phones. It's taught in schools. It's also very inexpensive. Most business laptops come with this tool already installed, and it's already running. It's very versatile. I mean, you can simulate database, you can perform complex calculation, you can store lists upon lists upon lists, and so much room for data. And it's very flexible. You can easily duplicate, you can make changes, you can create what-if scenarios and all kinds of things. And so it's a fairly powerful tool to manage your business. Now, why do we say that it's your biggest enemy? Well, we say that because one of the problems, well, there are many problems, but the biggest and the most dangerous problem that we have is dealing with data. So it's rather easy with spreadsheet to have incorrect data. It's easy to create mistakes in cells that go unchecked in cells or in formulas, mistakes in reference. You can reference different documents, and sometimes changes in the document have happened. And when it comes to managing inventory for wholesale distributors, that is where we have huge risks that are involved. So like any manual process, when you manage your inventory with spreadsheet, it's error prone. It takes one bad keystroke by the person updating the numbers to throw off the inventory. And these errors, well, they can lead to the purchase or the manufacturing of items that you already have, or the sale of items that you actually don't even have anymore. If you repeat these errors over the dozens or hundreds or thousands of products that you have, it's just not realistic to manually update inventory on spreadsheet and think that there is no mistakes present in there. Decisions are made with stock level information. That'll impact your ability to get financing. It impacts your real estate consideration on how to stock and hold all of this inventory, and also the workforce to maintain it. We were deploying a NetSuite for a large telecom in 2007, and we kept on running into a reconciliation issue between their data and the NetSuite report. They kept on telling us that our reporting was wrong. So we spent hours reviewing the inputs, double-checking every entry, trying to figure out what was going on. We even contacted NetSuite support to see if there was a logic or programming errors in the software. Inherently, we trusted the data of this large, big public telecom company. We just took for granted that their data was right. At some point in time, someone within our team decided to review the logic. And so we took every calculation of their spreadsheets and we followed it along on the ERP. And when we did that, we eventually found out that the error was in their spreadsheet. So a wrong calculation had been introduced, and this error had been carried on quarter after quarter. And they had reported wrong financial information for a few years by that time. It's pretty easy to make a copy of a spreadsheet. You can do it to test and to develop. It's also possible to be working from a wrong version of the file. I'm certain there's not a single listener on the call today, someone who's been in business for a while, who can say it's never happened. Files are sent by emails, they're modified, and the next person continues with an older version of the file, and the rest is history. It happens all the time. Spreadsheets also have no way to control data entry. It does not perform audits. It cannot trace what wrong data was entered. There is some validation tools. They're not used by and large. So wholesaler used files that are distributed and shared between multiple departments. Data is entered, and there's really no accountability to that data. There's no easy way to track the authors of the errors and to be able to correct those. And in extreme cases, it could be disgruntled employees who are tweaking the data. I remember in my first IT job, the network administrator was given a less than favorable review. Actually, he was put on a performance plan. He did not like that, and something kind of snapped, and he turned vandal. As the admin, he had access to everything, and his favorite target was actually changing the logic in our code. We coded in Delphi at the time, not that it matters to you guys, but essentially what he would do is it would swap some negative signs. He would reverse greater than and smaller than conditions. And because of that, it did not generate any compiling error. All it did is that it gave us logic errors. It was a nightmare for about 5 weeks. Eventually, we caught him by installing cameras, and so we caught him one evening doing this kind of work. Now, this is an extreme case, but it shows that a system without audits and traceability makes you vulnerable. So much time and energy was used to try to identify the code and fix it, that eventually all of our energy was spread on fixing that code. We ran out of money, and the business went bankrupt. So no business is ever not at risk from disgruntled employees. But finally, dirty data costs dearly. Not always as much as a bankruptcy, but tracking errors, fixing errors, putting in checks and balance to make sure errors do not occur again. Any time spent doing that is money and effort not spent in developing business. Wouldn't you rather your purchase managers spend time trying to fix spreadsheets or analyzing vendor performance? Let's move on to the second problem. The second problem really has to do with the agility. Out of date, old, and stale data is a big issue encountered by distributors. This out of date data directly affects your biggest issue, which is managing your inventory effectively. Most of you on the line, if you manage with spreadsheet, you know this to be true. To be efficient, the warehouse staff cannot go and update a spreadsheet every time an item is picked or received. Usually it is all processed in batch. These batches may be done on a daily basis, hopefully, but there are times when it's done at the end of the week, and in worst case scenario, every couple of weeks, or some have even done it monthly. The decisions to make special purchases, run special promotions, all of these decisions are delayed because the data is not there. Now, these gaps between what is actually in the inventory can easily lead to overstocking, or the opposite, which costs you even more, understocking. Consolidating inventory in multiple locations requires a huge amount of manual labor of merging data. It is completely a manual process of collecting files, merging files, validating files, pasting data. By the way, the copy and paste is the #1 spreadsheet process that causes error. So sometimes formulas and macros are created to move data from multiple files into one, and error checking is time consuming, and not catching these errors is quite dangerous. Collaboration with spreadsheets, well, it's pretty difficult. There are tools that foster multi-users in spreadsheets, but again, there's a lack of auditing and a risk to the data. The typical way of doing it, most organizations, is to deal with the spreadsheet serially, one user after another, and no multitasking can happen on these files. Any manual process is time and labor intensive, and not just because you need to spend the time and labor doing it. The bigger problem is that business often have to spend time redoing it. So if someone goes into the warehouse and they do a counting of the inventory on a notepad, on some kind of device, that inventory, that's doing the inventory once. Then someone in the office is probably going to transcribe from that file into another file, doing some copy paste into a spreadsheet, and that's twice. Another person in the office will double check the counts, making sure that everything adds up, and that's 3 times. If some errors are spotted, someone has to go back and redo one of these operations, and that's 4 times. Now, if you were to have an electronic warehouse management software, that would do it correctly, automatically, and only once. The third problem that we have with spreadsheets is the idea of compliance. Generating SOX status reports from multiple spreadsheets is no different, and there's no real-time actionable data about SOX compliance available to management. If you report incorrectly or report late, your business may be subject to harsh sanctions or penalties or fines. Maintaining confidential records in a spreadsheet, not a good idea, though it's common. Actually, I have a brother who's the director of a large project in a construction firm. One Monday morning, he received an email with an attached spreadsheet. This was normal. They received the project update every Monday morning. But on that particular day, the file name was different. And so when my brother Denis opened the file, what he saw in there was a list of the entire staff with everyone's salary and compensation packages, the bonuses, the vacation time, everything was in there. On that very day, they lost their 2 top project managers because they were more experienced than the others, and somehow they were paid a little bit less than some of the others. Your financial reporting requirements for leases will come into full force in 2019 or 2020 through ASC 842. When it does come into force, and that will depend on your fiscal year, but there are penalties and fines to late or incorrect reporting, so tracking this properly can affect your business. Many wholesale distributors have leases on warehouses and locations in different areas. And though it's not a true compliance subject, there is a compliant way to program, such as naming convention, the location of where your macros are, the scope for variables, and the security. And it's not uncommon for non-programmers to create complex functions, macros, and even put VBA code in the spreadsheet. And without the right professional background, errors in code and logic are frequently found. In an ERP implementation, we came across a spreadsheet formula. The company was wholesale distributor of geotextile fabric, and they were getting it from a location that was shipping it in yards, and they were to convert it into meters. And so there was an error that was applied to the conversion formula for one of the product. And on that particular product, it turned out that the inventory was 30% higher than the actual book value that they had. Kind of a good error. It was in their favor for that particular error, but it was an error nonetheless. At the risk of repeating this, any process, any record tracking, any inventory calculation performed on a spreadsheet will require more employee time to create and maintain, more employee time to validate, and typically will have more errors than an automated process. All of this employee time, all of this cost in manual labor, that eats away at your bottom line. So what is wrong with spreadsheets? I'm not against spreadsheets. As a matter of fact, I think they're a very effective and powerful tool. It's just that, much better than a pen and calculator. Who would ever think nowadays to run your business just with pen, paper, and calculators? Spreadsheets totally revolutionized business. Way back in the 70s, my uncle used to run a sporting goods company. I remember doing inventory for him twice a year, pen and papers. Two of my brothers and I, we joined with all of the cousins, and we took 2 Sundays, one in the fall and one in the spring, clipboard on hand, and we counted everything. I was the youngest, so I was always stuck counting fish hooks and lure and tiny little things. Now, the flip side of this was that I never had to pay for my custom skis when the time came for me to compete, which was good. But then appeared Lotus 1, 2, 3, and it was a definite improvement on the way that we did the counts, and it improved the speed at which we did it. Just as the spreadsheets were a huge evolution on the pen and the calculator, there's something so much better now, much better than spreadsheets. So where do we go from here? Well, I made the case that spreadsheets are bad. So bad, in fact, that I think that they're a legitimate threat to how your business operates. So what is the solution? Well, just like spreadsheets were that significant upgrades to pens, calculators, software, excuse me, is the next evolution in business management. Many software for business applications. They all have their acronyms, and they perform various functions for the enterprise. Some of these would be a customer relationship manager, a CRM. That's a well-known term, I'm sure. This manages the relationships between you and your clients. In many of them, you can manage your vendors as well. Your CRM is a system of record for all the data that has to do with your relationship with outsiders. You track your contact data. You can track the emails that are being sent to and from. You can track the number of activities made with these individuals. It also includes the automation of sales and the automation of purchase orders. A warehouse management software, WMS, that's used to manage your stock levels, traceability, manage your serial numbers on items, the location of items in a warehouse. You can manage your replenishing rules. When you have an integrated WMS, the inventory levels are automatically maintained. The warehouse staff knows exactly where items are and how many of them are available at any point in time. HCM would be a human capital management software that's to manage the employee, the training, the skills, compensation, your payroll. The BI is a business intelligence. It's a tool to get insight into your organization with performance indicators and dashboards and scorecards. The supply chain management tool are able to manage the flow of your suppliers and all of the items and track all of your product. Now, all of these automated tools exist to track and record within their own specific sphere. For example, a human capital management, an HCM system, has no knowledge of item SKUs. It has no knowledge of sales orders, nor should it. Its focus is merely and solely on employee. So who's your new BFF? Who's your new best friend? Well, what's better than having various application software? It's having an integrated application software. And that is when we use the term ERP, when all of these are integrated together. There are many definitions for ERP, but we generally refer to ERP as the software that runs your business. It's more than accounting. It definitely is all about accounting, and it provides a single source of truth for your data. And so while a human capital management system does not deal with items, SKUs, or sales order, it does maintain employee ID. And these employee IDs are used to track which sales rep made what quote, who picked and packed and shipped what goods, who is in charge of procurement. The HCM can contain sales quota per sales rep, but it's the ERP that will automatically track quota achievement per year, per quarter, per day, or whatever dimension you wish to use. All of these tight integrations allow for relationships to be drawn between all of these entities. Sales reps are able to see current and live stock levels for any items, purchasing managers are able to see all of the open quotes, and with those quotes, figure out what kind of impact it will have on stock levels. Executives are able to see which products move well, which ones do not, which suppliers deliver on time, what's their fill rate, what is the RMA rate. Customer service can access any order and inform the customer on their status. So when a customer calls to ask about a product, within a few clicks, the customer service agent finds the order, finds the shipping manifest and the tracking code, and is able to tell the customer exactly when the product will arrive. New employees are just assigned specific roles and access the information that is relevant to their job. So an ERP, an integrated ERP, will give you a 360-degree view on the entire business with the ability to drill down to every piece of data within your organization. I'd like to consider a practical example now. So if we look at this example, what we have here is various processes that you're going to be familiar with, and we're going to use NetSuite ERP as a core for our example. NetSuite has a completely integrated CRM, WMS, HCM, finance, and supply chains functions. So imagine that there are 12,300 widgets in stock. Kyle creates a quote. Kyle is the first guy on the left. He creates a quote for 1,000 of them. And once the quote is saved, 1,000 of them are marked as reserved. They're reserved for a quote, but they're still in stock. They're still on the shelves. And Mary, sales rep number 2, she creates a quote, but then converts it immediately into a sales order for 5,000 widgets. Those widgets are still in stock, but now they're committed to a sales order, and therefore they're not available to anybody else. So between the 1,000 reserved on the one quote and the 5,000 committed, the available inventory is now decreased by 6,000. Larry picks, packs, ships the goods. The inventory, once that is left, the inventory is automatically adjusted. 5,000 of these items have been shipped out. 1,000 remain on reserve. So the inventory minimum has now been achieved and has dropped below 10,000. Michelle, who is the purchase manager, she's notified, and then by clicking on the items queue, she's able to see that there are another 1,000 widgets committed by Kyle's quote. So she makes a decision to buy another 7,000 to replenish the warehouse. Mary creates another quote for 3,300 widgets. The inventory reserves these items for this quote, and now the minimum stock level is reached again. Between the two quotes, there are 4,300 items on reserve but not committed. So after being notified, Michelle can now make a decision whether she's going to up her order or not up her order based on the probability of the sales closing. So if we go to, if we take a look at how this would work in our next slide, in Excel, most oftentimes there's at least 2 and sometimes 3 of these Excel spreadsheets that would be available, and that would be leveraged to do the process. So Mary and Kyle would have access to the sales/inventory Excel spreadsheet, which has either some direct links or has some formulas to update the inventory file that is used by Michelle and by Larry to manage the actual inventory. And so in order to do all of these operations, it is a process that would be manual, that has a number of formulas and macros, and oftentimes, as we've seen, errors slide in there. Not only errors slide in there, but it is not done in real time, and so there's somebody that needs to do an update, a manual update into the file. So whenever Kyle or Mary are entering their sales order file, their sales order, they need to open the file and actually create an entry into the sales order so that the the other system is up to date. Excuse me. Let's move on to some of the benefits that we have now. When an ERP is used, here are some of the changes that are going to take place. There's going to be a reduction in manual processes, because any transactions in the ERP contains all of the basic information, and basically the transaction simply changes its status along the way, You reduce all kinds of manual inputs and all kinds of errors. There are fewer transcription errors. There are fewer errors attached to the wrong customer. There are fewer errors from transcribing data from one place to another. With less manual processes, your employees now have more time to sell. They have more time to process sales, to deliver your products and your services. So rather than spending time updating and correcting a spreadsheet, your employees are now empowered to make decisions based on the empirical data. Inventory is committed or reserved in real time, so you can plan your purchases better and reduce stock levels. So rather than spending time, again, updating a spreadsheet, you can evaluate vendors, research new product, plan an expansion. The single view approach lets you be more in control of your lead to cash process. The automated forecast reports can be delivered to your mobile to help you make decisions about your financial capabilities, your cash position, your aging AR. The single view of the procure to pay process helps you manage your vendors, your products, the relationships with your vendors, the available square footage, the future required square footage, the shipping costs and the logistics. The single view of all your operation essentially keeps money in your pocket. Productivity usually shoots right through the roof after an ERP implementation. Studies by Gardner, by Aberdeen, Forrester, Forbes, and all kinds of others agree on one thing, is that better productivity with an ERP shoots anywhere between 30 and 60%. You can do so much more without increasing your payroll. So who's your new best friend? Well, we've been involved in many ERP implementation over the years, and in 100% of the cases, we automated manual processes that relied on spreadsheet. If there's one thing that we're absolutely and completely certain of, is that spreadsheets can reduce your margins considerably. There's all kinds of business processes that are manual, and whatever money is spent to pay employees who do it, that money is never recouped. The process is not scalable. The process is not profitable. The process eats away at your margins. Deploying an integrated ERP is going to reduce waste in your organization by cutting out all of these manual processes. It will give your team time to process and move more products. The final result is an increase to your top line, but more importantly, to your bottom line. So I see that we have a couple of questions here just as we close. The first question has to do with, do ERP track lot numbers and sublots? So yes, they should. Our ERP allows you to track lots whenever they arrive from your supplier. These lots can be severed in smaller portions and maintain tracking effortlessly. The items, once they're picked, the lot record is recorded. So if you think about a picker walking around with a scanner in his hand, they're walking around in the warehouse and they basically scan the item, and the lot number is attached to the item, and that lot number is tracked directly to the customer in the order. Food distributors and pharmaceutical really love these features because they know exactly which lot was sent to which customers, and if ever there's a recall, they're able to bring them back. So the ability also to take a lot number and sever it in a number of sublots is quite possible. This helps also with expiry date. I remember doing an implementation with a car paint manufacturer, and basically he was able to return paint if it to his supplier if it met the timeline process, and he would often end up with old paint simply because he was not equipped to track lots properly. So if he's able to, if he had, well, once he did have the system in place, he was able to track his lot and the expiry date, so he was able to return the paint before it reached the expiry. See, a funny question about my brother. Yeah, he did quit the business, but not on that day. He quit 2 weeks later is when he dropped out after this snafu. He felt that that organization was a bit of a shambles. So anyway, can you get more information on ASC 842? If you're asking about those requirements, that's something that our accounting team is able to help. It's beyond the scope of this this presentation we're doing right here. We're merely speaking about how an ERP is able to help you track the lease information that is required. How expensive are ERP? Well, that's a good question. It depends on a few things, but you should expect to have approximately 1% of your sales dedicated to it. For some of you, that might seem like a lot of money, but if you consider the amount of money that you spend on manual processes and handling it, you'll find out that you can probably self-fund your ERP with by implementing a brand new one. Well, I think that's all the time that we have for now. For those of you who have other questions that we didn't get to, if you haven't had a chance to type it yet, make sure that you type it in. We will reply to every single one of your questions. It's going to be done by email, and pretty soon, I think, our webinar is going to be posted. I'm going to let Sasha let you know about these logistics. Up to you, Sasha.
Sure. Thank you, Renee. That was great. And just to leave you with a couple of next steps, if you're interested in learning more, like Renee said, please submit your questions. We're happy to answer those. If you just want to chat, we have a no obligation, 1 hour, whatever, half-hour conversation to help you learn more, see what maybe fits your distribution business the best. We have a lot of great resources on our blog at digital.witham.com/blog. Renee has written some great blogs about ERP solutions, and one specifically for wholesale distributors as well. So check that out, and we will talk to you guys soon. Thank you, Renee.
Thank you.